Okay, I'm very happy to be joined again by the one and only Tim Price. Tim is a portfolio manager for private clients with pricevaluepartners.com. You can check out the website for more information. And he's also an author. He has invested. Yes, he has written, an author who invests. Yes, he has written 2 books. One is called Investing Through the Looking Glass, and the other called The War on Cash. And it feels like an eternity since I've last spoke to you, Tim. How are you?
Very good, thanks, Rick. How are you?
I'm not bad, actually. I'm not bad. I was watching some Coen Brothers movies over the last week or so, and you came to mind. I remember we had a little exchange on here once around the film Blood Simple. I don't know if you remember that one or not, but I've been watching a lot of Coen Brothers stuff. Yes, you're also a connoisseur of fine movies, which is helpful in these days, don't you think?
Yeah, the one I'd mentioned, I don't know if we discussed it before, but there's an absolutely terrific film from about probably 10 or so years ago called Take Shelter with Michael Shannon, who's one of my favorite actors. And Take Shelter is a fantastic parable metaphor for sort of what we're living through. The writer and director said it was written in direct response to the then financial crisis, but it's an evergreen topic of basically someone whose world is seemingly disintegrating before his eyes.
And that is that Coen Brothers, or is that by a different?
It's not. No, I'm trying to think of the director, but it's not a Coen Brothers film, but it's a superb little piece. I can't recommend.
Well, I will take that as a recommendation. I value your film choices, so I've noted it down under my notes here today. Take Shelter, in inverted commas. That's not just advice for us listeners out there, but it's also the name of a good movie. So if you want a good movie to watch or check out over the next few days or even over the Christmas period, I think Take Shelter, it's down on my watch list now. So thank you for that, Tim. Let's get down to bones. Let's get straight to business here. A lot to talk about. I want to talk about interest rate hikes, because since you were last on, there's been a lot of stuff happening in the financial world. The currency exchanges, the pound seems to be yo-yoing against the dollar. An outlook for 2023, FTX has collapsed since you were last on here. Bankman-Fried has been arrested. We've talked about crypto in the past. You're a little bit adverse to it in terms of you don't hold it in the portfolios, and you've explained why. It seems to be funneling people either towards Bitcoin or governments towards CBDCs, the constant war on cash. There's a lot we have to try and squeeze in to the next 33 minutes. So let's start with the interest rates. Bank of England is expected to add another 50 basis points to bank rate this week and take borrowing costs to 3.5%. Mortgage holders and debt will further push people into poverty. Repossession in the new year is likely, as will property price crashes. I seem to remember you and I discussing this around about June or July time. It looks like it's coming to pass now, doesn't it?
Yeah, I mean, when I said Take Shelter as a film, I think the words Take Shelter are also appropriate advice for financial markets for the next or for the foreseeable future. The point I'd make about UK rates is, and I may have mentioned this the last time we spoke, but I think what the sort of catastrophic example of sort of UK government bond price behavior this year, not just around the time of the Liz Truss short-lived budget that was, but really all year, has been what it's shown is that when central banks drive interest rates down to zero, they effectively create a black hole from which monetary policy can never recover, can never escape. So when the Bank of England tried tentatively to do quantitative tightening, in other words, hike rates rather than yet more QE, it completely blew up. It backfired. Gilt yields, UK government bond yields rose horribly, i.e. prices collapsed. And I think that although we were one of the first central banks to be shown to be sort of moving around the town naked, Japan is also in the same boat, and they've been in a deflationary recession, if not depression, for decades now. I think everybody gets a turn at this table. So it'll be the ECB next, and these problems will ultimately wash up against the US dollar itself. But at the moment, what you're showing is the complete policy failure of central banks trying to control inflation when all they have is the brute tool of interest rates. And as we can now see, I mean, it's visible and clear to everybody, you cannot hike rates in what's already probably a global recession. It's more or less impossible, and the U.S. Federal Reserve will experience that in time as well.
Yeah, it's been looming. Well, these rates have been, they've been racking up over the last 6 months. Looking into 2023, I don't think we're going to see the end of them, and it will mean a lot of woe for people with mortgages, especially those coming out of fixed rates that have maybe enjoyed the benefits of extremely low interest rates for a very long period of time in a locked-in deal. They'll come out of that then in the new year, possibly, or even this month, and they'll get the surprise of the day, especially when a lot of the favourable rates are now being withdrawn by financial institutions, because obviously the banks don't want to lock people into lower rates when they know the rates will likely continue to rise. We've got to take a real quick news break, like a minute, and when we come back, let's look at the outlook into 2023 for people that do have mortgages, unsecured loans, credit card debt. What is the outlook of 2023? Will we hit a peak in the early year and then it'll tail off, or what can we expect in the UK for interest rates going forward? Because this does affect all of us. So don't go away, listeners. We'll be right back after the news.
I have some good news. TNT Radio News.
Matt.
Just want to say hi to everyone that's in our live chat at the moment, tntradio.live, for all your comments there. Maz is in there. Mr. Bumble. Holly is in there. Who else? Anti-Lockdown Alliance. There's a few anonymous people in there. Englishman is in there. He's asking me, are my pronouns still he and him? No, they're not. I'm now Zeds. Whatever the hell that is. I just feel like it today, and tomorrow I might be a she, him. I don't know. I don't believe in all that crap. But anyway, if any of you out there, by the way, have any questions or you want me to field to Tim for the remainder of the show, feel free to throw them into the chat. An Englishman's actually said the dollar will fail on the way up. We have never before seen interest rates rise the same time as the dollar rises. What do you think about that, Tim?
I think the dollar will end up failing. I think quite likely we're going to see a global monetary reset, currency reset within the not too distant future. There is something like 100 plus governments and central banks now working on rushing in central bank digital currencies of their own. Nobody wants this except central banks. So I'm not convinced it's necessarily going to happen the way the authorities want, but that's clearly their direction of travel. But I think we're going to see, my advice to anybody in a currency perspective would be, buckle up. It's going to be a bumpy ride. I don't think we're remotely through this. I think there's plenty of currency volatility to come.
The pound has been interesting over the last 4 months anyway, since about August up until now. We've seen it falling all year against the dollar, and then it really tanked after the so-called mini budget that Kwasi Kwarteng unleashed that fateful Friday. I think we've seen the pound against the dollar down to as low as about 104. It rebounded back a little bit up to 112. It then hit another rocky point. Now, the commentators are saying it's on a rally. It's rallying up to around 124 as per today, but I've been checking various financial commentators over the last few days, and they reckon that would be almost a resistance point at 124. I mean, it's not a case of the pound's getting stronger, it's the dollar's getting weaker, or the dollar's getting stronger, it's the pound's getting weaker. The currencies are really up in the air at the moment, aren't they?
Yeah, I mean, trying to predict currency movements, I think, is a fool's errand. Very few people can do it successfully. Certainly, we're not bright enough to do it. But the thing I would say is that currencies don't float; they just sink against each other at different rates.
They do. Now, tell me this. We touched on it just before the news there. Outlook for 2023. I know we haven't finished 2022 yet, but we've been it would be foolish not to try and see where things are going and make preparations accordingly. Okay, so although we can hypothesize on what might happen, obviously this might go out the window. A curveball could be thrown and maybe it won't happen at all. But interest rates, I believe, will continue into 2023. Some people believe they will peak at around about March, April. The same thing in Australia. The interest rates are being constantly hiked up in Australia. They think the end of that will happen sometime in 2023. Can you see that happening or plateauing in 2023, or is this going to be a constant tightening of the screws throughout next year, do you think?
It's a tricky one, but I'd be minded to think pragmatically that, I mean, the most important central bank in the world, the most important interest rate in the world is basically the US. It's the US Federal Reserve, and basically the yield on US 10-year paper, US 10-year government debt. My suspicion is that the Fed will slowly attempt to tighten further over the next few months, maybe not as aggressively as it has done, but there will come a point when Fed tighten, any further Fed reserve tightening equates to basically breaking something in the market. And when that moment becomes more widely appreciated, the Fed will be forced to pivot. In other words, it'll stop hiking and it'll actually start making sort of much more placatory noises about gently easing rates. And I think if that moment happens, you're going to see a widespread collapse in confidence in central banks, full stop, not just the Fed, but all of them. Because these jokers clearly, we're living in clown world, so these guys clearly have no clue what they're doing. So I think there's a possibility that we'll see slightly higher rates up into the first quarter of next year. But basically, the Fed is currently minded to hike until it breaks something. If it looks like it is going to break something, they're going to have to reverse. And then that probably means we're in for an inflationary rally in risk assets all over again.
It's not good. It's not good. And obviously, some of the people being affected by these interest rate hikes are homeowners. People are wondering, is now a good time to buy? I remember I asked you this question, actually sampled it, put it up on Twitter as a post. A lot of people reposted it as a good time to buy right now. We were foreseeing a crash in the property market because, affordability, employment security is not there. There's been strange inflation in house prices during the pandemic. So another person has written in with a question. I'm going to field it to you. Jazzy J has written a question, and this is the question. They just sold our house, keeping money in the bank for now. Do you think it would be wise to keep the money in the bank and wait for house prices to drop, or buy now if the currency is going to crash? So we have a homeowner who's liquidized his asset, the money's sitting in cash, worrying about a property price crash. Should he hold fire, or should he go ahead with it if currency prices are going to drop? Well, if it was you, hypothetically speaking, what would you do?
If it were me, hypothetically speaking, I'd be extremely keen to convert my money in the bank into something real, because I'm most concerned about not so much a property market collapse as I am about, as I say, this sort of monetary or currency reset, whereby potentially people with significant cash savings, also people with significant investments in bond type assets, suddenly find that their assets are potentially frozen in a currency that's no longer being nurtured by the state, let's say. So given the choice, I think I would actually rather own property than I would have money sitting in the bank waiting for a property market correction. That's not to say that the property market won't go down, but I have an absolutely existential concern about having money inert in the bank when you're being paid very little recompense for lending it to the bank, and in return you get basically 100% counterparty and now sovereign credit risk. So my answer would be I'd rather own property, potentially, especially if it can be valued sensibly, if it can be purchased at a sensible valuation. Yeah. Right now, cash and bonds are the worst investments I can think of in history.
Yeah, that's interesting that you say that, actually, because there are a lot of people in that position whereby they don't know what to do, and obviously, we're only speculating on what might happen next year. We, take advice and then make your own decisions, whoever you are, whoever's listening in now. But it's interesting there what you said, that even though buying another property at this point, yes, the market can continue to fall, at least you'll hold a tangible asset rather than leaving a large lump sum, 100 grand, 200 grand in a bank that could effectively go pop or shut down or be liquidated, in which case, and you're getting nothing back as a return for it. So interesting take on that, Tim, and for Jazzy J out there, I hope you find that answer beneficial. I think in summary it is, I would buy another property rather than leave it sitting as a huge lump sum in a bank, especially with what's going on at the minute with regards to cash. You do seem to be, you and I have talked quite a bit, Tim, over the course of this year, which has been great. And you do seem to be more concerned at this point with cash and banks going forward than with anything else. Is that a fair point? Your concern levels are elevating when it comes to fiat currency or cash held and deposit?
Yeah, I think that's entirely fair. I mean, I think you used the word, tangible. I think the cornerstone of any, sensible investment strategy right now has to be, the sensible investor has to be minded to favor tangible, real assets over financial paper fiat ones. It's as straightforward as that. I think we're living through, I was just looking at the FT earlier this morning, and there's a piece by Howard Marks, and he was a well-known, well-respected hedge fund manager in the States, so investment manager in the States. And he pointed out that he thinks this is basically what we're currently living through is a sea change in sort of financial evolution, financial market history. And every time you have a big change, it's invariably through some kind of monetary reset, or currency reset. So the big ones that we've had in the last 50 years in my lifetime have been Nixon taking the dollar off gold in 1971, and then more recently the introduction of the euro in Europe and the EU, and sterling's ethnic cleansing from the ERM in 1992, which was the first thing I really experienced as a big story in my career. And the bottom line is, when you have monetary system regime change, which I think is increasingly likely because we know central banks are pursuing CBDC policies, trying to introduce this horrible technology, sort of slave technology, then that has implications for investors. So at the risk of sort of repeating myself and being a stuck record, there is a risk that we see something like what Latin American countries are used to, which is you go to bed on a Friday with 100x in your account, and then mysteriously there's a bank holiday announced over the weekend. You wake up whenever they reopen the banks, and mysteriously your 100x is now maybe only 80x or 70x, or maybe 100x has been converted into 100 new x, and the 100x is now frozen and you're unable to use it. So if that sounds alarmist, I think wait until you see what's coming, because to be utterly candid, most governments around the world are now hopelessly bankrupt. They can never pay back the debts they've accumulated. So the only question is how they attempt to get out of this quandary, out of this predicament. And the chances are that people exposed to that debt are going to end up being the bag holders, and you don't want to be left holding the bag. So that's why I'm so concerned about having meaningful allocation to cash, having meaningful or indeed any allocation to bonds if you can avoid it.
Yeah, good advice. And there is the collapse that's coming. It's not a case of if it's coming, it's a case of when it's coming, I think. And people definitely need to brace themselves as far in advance for that as possible. Tim, we've got to take a quick ad break. And when we come back, let's look at some other alternatives, because maybe somebody is out there thinking, well, I have a lump sum and I don't want to go into property at this time. And obviously there's a lot of other avenues they can go down, a lot of other people maybe trying to bait them down various routes of investment going forward. Let's look at maybe silver, gold, precious metals. Obviously, crypto is an alternative out there being put forward by some. All sorts of things are out there to tempt the wannabe investor. Let's look at other options and give them a thumbs up or a thumbs down when we come back here on TNT Radio. Don't go away.
On air 24/7. This is today's News Talk Radio, TNT.
Okay, Tim, someone might be listening in and thinking, well, I hear what you're saying about cash or money in the bank. I don't feel comfortable with that. I'm not so comfortable buying a property. Maybe liquidity issues there. Should I decide to sell it? I don't want to sell it at a loss and pay all the fees, etc. Obviously, there's other alternatives out there, some of which we have discussed in the past. For example, physical precious metals, buying silver or gold. Equities, of course, is always in there. You mentioned gilts earlier on there too. And obviously the old crypto, Bitcoin type investments. Now, I know you don't touch those yourself, or at least not within the funds that you manage in pricevaluepartners.com. Silver and gold, let's look at that. What do you reckon about that? Holding a little bit of silver, a little bit of gold. What's the outlook for that one?
We've been investing in silver, in physical silver, physical gold, and mining interests in the precious metal space now for getting on for probably 20 years in one form or another. And the first thing I'd say, whatever you're looking at, whether it's commodities, whether it's precious metals, whether it's crypto, whether it's property, whether it's stocks, whatever it is, the single most important characteristic of any investment you make is the starting price when you make it. So the inception price. Even the worst investment, the worst quality asset in the world can become a good investment if you buy it cheaply enough. And conversely, the best quality investment, whether it's a stock or a bond or a property or whatever, can be a lousy investment if you pay too much for it. So price really is the key characteristic. In terms specifically of silver and gold, the reason we single out silver and gold for our portfolios as opposed to things like platinum and palladium and rare earths is that gold and silver have always been money. For as long as humans have conducted trade between each other, silver and gold have always been money, and silver's been the poor man's gold simply because it's worth slightly less, or it's worth quite a bit less in sort of mass or weight terms. But they've both always been monetary substitutes. And if you want a legal definition of money, it's gold. Everything else is credit. So that's why we single out gold and silver. But also they both have uses. I mean, gold is something that's becoming remonetized in the sense that central banks are now aggressively buying it again. And they're not doing it just because they like the look of it. They're doing it for specific reasons. So one suspects that, as I say, the central banks are preparing us for some type of new monetary system. And time will only tell exactly what that comprises. Silver's a really intriguing one to the extent that in addition to being sort of a jewelry item, it also has quite a few industrial uses. You can't basically have smartphone or digital technology without silver because it's the best conductor in the world. So they're both interesting and useful, but I think I single out their monetary aspects. I think that at a time when conventional money, fiat currency, is being eroded by the day aggressively by governments and central banks, that's really a period when the likes of gold and silver specifically should come into their own. And if you look at the longer term returns, basically since 2000, gold and silver have risen in dollar or sterling or euro terms pretty much every year. Not every year precisely, but they've been very consistent performers. And clearly I'm sort of talking our book here because we do own this stuff. But whether or not we owned it, I'd be suggesting that now is potentially a time when precious metals could really come into their own, because they are a form of currency that can't be printed on demand, and they're a form of currency that, unlike paper currency, is nobody's liability. So if you own sterling, say, or US dollars, that's ultimately a liability of the UK or US government. If you own gold, it's nobody's liability. You're not dependent on anybody for the value of that, just what someone else is willing to pay for. That has value in this kind of freakish environment.
Indeed. Now, let me say this. Someone's listening out there maybe, and they hear what you're saying and they're nodding in agreement and say, yep, I like the sound of this investments in gold or investments in silver. They maybe don't want to do it through a managed fund. They can do it directly. What's the best way to do it if you want to hold physical gold coins or physical silver coins? I know a lot of people are starting to buy them up now in small quantities. What's the best route to follow if you want to dabble in precious metal ownership? Direct precious metal ownership. So
there are plenty of providers for bullion now. It may be difficult on a day-to-day basis because this stuff is Gresham's law dictates that basically in a period of sort of financial uncertainty, bad money, i.e. the fiat stuff, drives out the good money. So in other words, the good stuff, the likes of gold and silver, get hoarded, and the bad stuff is what actually ends up circulating. So there's a shortage of the good stuff when you really need it. But there are no shortage of bullion suppliers. In the UK, at least, if you buy sovereigns and Britannias, you can buy those free of capital gains tax, to the best of my knowledge. So they have there's a certain attraction there because they're legal tender, because they're actually money good. The face value is clearly out of all proportion to what the purchasing power of the precious metal itself can get you. But they are basically legal tender. So if you go to check out a bullion dealer, a reputable bullion dealer, buy some of the coins, you can clearly buy a lot more. You get a lot more bang for your buck if you buy silver than gold. So, for example, when I started out on this journey about 12 or 13 years ago, I was buying individual ounces of gold in coin form, but I was buying kilo bars of silver because you can get that much for it. It's so much cheaper at about $23 or whatever it's trading at now per ounce. But basically, find a reputable dealer, start the process. And if you're going to buy a lot of this stuff, make sure you have a safe at home. You don't want to own this stuff within the financial system. The whole point of it is that it gives you an avenue out of the financial system. So you don't want to keep it stored in a bank vault. You want to keep it ideally in your own home, or else with a third-party custodian that you can really trust.
Yeah, there's someone, just as you're talking here, a lot of people in the chat seem to be agreeing furiously with your recommendations for precious metals.
Clearly people have taste and discernment, Rick.
Yeah, well, they do. And of course, so do I. That's why I keep asking you to come back on here. I do value your opinion. And of course, I get people in with other views, people that are very, sort of would be very pro Bitcoin. I like to try and cover all the bases. And then what I'm trying to do is give the listeners information from what I believe are trusted sources, and then let them and encourage them to use their own, critical thinking parts and make their own investment decisions for themselves. We actually have a listener in here, Shuet47 says, if I can only afford £200 each month to invest, where do I go? So is it possible, for example, with an investment of £200 a month, is there a lower limit on these UK bullion dealers, or is there minimum amounts that they have to invest? Can they set up a regular purchase agreement, almost like a direct debit with a bullion provider to get a bullion delivered on a monthly basis? Can that be done?
You'll probably get savaged at that kind of level in terms of sort of the bid offer spread, the commission or the premium you have to pay relative to the spot price. So my best advice there would be, if you're looking to put away a few £100 every month, you might want to consider doing that in the form of something like an exchange traded fund or a listed fund that invests in bullion, because that's the kind of thing you can do within an ISA account, an individual savings account, and have like a regular payment every month. If you're looking to buy bullion through a fund, the crucial thing is to ensure that you're getting what's called physical allocated bullion. In other words, it's in your name and not in the name of the fund. So in other words, what they can't do is what's called rehypothecated, i.e. lend it out without your prior approval. What's going to happen at some point in the months and years to come is that there's going to be a run on gold, run on silver potentially. And what that will reveal is that there are an awful lot of people swimming naked. So basically, I think the Reserve Bank of India did some research a long time ago, and they suggested that for every ounce of precious metals, in the market, there are 100 paper claims on that ounce. So in other words, when the game of musical chairs, when the music stops, there's going to be a rush to get that ounce, and not everyone's going to be successful. So if you do it through a regular savings into a bullion fund, which I think is an excellent idea, by the way, because that also gives you the benefit of pound cost averaging, then just ensure that it's physical allocated bullion.
Yeah, good advice. And Holly, by the way, a regular listener in here today, Holly has commented, good advice. Thank you. I've been thinking about silver for a while. I'm going to do it. So she's been convinced, let's just say today, by some of the points that are being put forward. Other people are a little bit more skeptical. Brooksy says, so when everybody only has programmable UBI, what are you going to sell gold for? How are you going to buy a loaf of bread with it? I think that's missing the point a little bit. Number one, we're not at the programmable UBI stage as per now. And as per now, any assets that you have or any accumulated assets that you have to be held somewhere. And this is something that is an option for you going forward. Of course, everything could change next year. Of course, all hell could break loose and all this could be out the window. But we're working on the here and now. We're working on what would be a viable short-term option here. And of course, it's part, I would say, and I think you would agree with me, Tim, as a balanced strategy. So anyone thinking what you've just said, like Holly, for example, that silver's a great investment, it would be foolish to go all in on silver bullion or all in with everything she has on a bullion fund, with her allocated to it. You need a little bit of diversity in there, don't you?
Absolutely. So diversification remains what I call the last free lunch in finance. So things are so uncertain out there, and I don't dispute that there's risks for CBDC, there's risks for universal basic income, there's risks for programmable currency. But that's exactly what the drive towards real assets is all about. There was a thing I was going to mention. I'm sure I've mentioned it before, but I'll briefly mention it again. This is to indicate that human nature doesn't change. The Edict of Diocletian was introduced in 301 AD by the Emperor Diocletian, and because he was dealing with a hyperinflationary collapse of the Roman Empire. And what the Edict of Diocletian said was basically agricultural prices, grain prices will not rise on pain of death. And you know what happened? Grain prices still went up. So governments can do whatever it likes, but ultimately there is a free market response to that action.
Yeah, that's the thing, and and as I've said several times throughout this chat that we've had today, we're only looking at the current state of play, and based on what we can see, we're trying to forecast what may or may not be a good investment strategy, or may or may not be good options for people going forward. But the bottom line is, anyone that's listening, or you or I, we have to come to our own conclusions, and of course, we have to accept any losses or gains that come as a result of that. We could actually talk all day about precious metals by the sound of it. There's so many other things that I wanted to cover off with you today. I'm not going to get the chance to do it. Just in case anybody's interested, because a lot of people are responding to what you've been saying here today, you can contact Tim on pricevaluepartners.com. He's a portfolio manager for private clients, and he's also an author of 2 books, The War on Cash and also Investing Through the Looking Glass. So if you go to the website pricevaluepartners.com, you'll be able to contact maybe Tim there if you have any questions for him. And you also have a podcast or a YouTube channel, I believe, that you put out regular content on. How do people find that on YouTube? These are like instructional videos.
It's called The State of the Markets podcast. The most recent guest will be up shortly was, I think, someone known to you, a lady called Sarah Plumley.
Oh yeah.
And the State of the Markets podcast you can find on YouTube. Just look up State of the Markets or thinktrading.com, which is the address of the service.
So let me get that right. I'm just writing this down here. So thinktrading.com, you can check that out. And if you go to YouTube, if you've been stimulated by this conversation and you want a little bit more, the State of the Markets on YouTube, and of course pricevaluepartners.com. Tim, we're out of time. Time flies when we're talking money, talking finance, talking all sorts of shenanigans. It's been an absolute pleasure to have you on throughout 2022. I've really appreciated your input, and hopefully we can continue our discussions into 2023. But in the meantime, have a very good Christmas. Best wishes to you and your family. That's Tim Price. I'm Rick Munn, and I'll be back after the news with Nick Corbishley. Please do not go away.